Okay, so hi and assalamualaikum. Now we will presenting about our report writing project. Okay, I will tell you about the definition of pension scheme. Okay, a pension is a scheme to which a sum of money is added during an employee's working year and made to cover a person's retirement from jobs in the form of annual payments, it is ruling by the Pensions Act 1980, and this act provides for the administration of pensions, allowance, and other benefits for public service officers and their dependents. And pension scheme is recognizing and praising the outstanding service which provides life nourishment to the dependents of employees and establish a form of benefit scheme for workers who are required to retire or die due to injuries or illness due to damage in the execution of their duties. That now is about Employees Provident Funds (EPF). EPF is a federal legislative agency under the responsibility of the Ministry of Finance, handles the obligatory savings scheme and retirement planning for private sector employees in Malaysia. And the membership in the EPF is obligatory for Malaysian citizens and optional for non-Malaysian citizens. And EPF is ruling by Employees Provident Fund Act 1991, and the purpose of EPF is to help employers in the private sector save a fraction of their salaries under a lifelong banking plan to be used mainly as a savings fund. And now I will tell you the definition of SOSO. Okay, the Social Security Organization SOSO, also known as POCASO, is a government agency founded to enforce and manage social security programs. Ruling by Employment and Social Security Act 1969, it has also been developed to provide social security for workers and their dependents. It is responsible for the management of two social insurance programs, which is first is workplace injury program and second is invalidity scheme.
Hi, good day everyone. My name is Nur Eryna Nisha Tarmuin 264304. Today I will present in 2.0 similarity and difference between pension scheme, EPF and SOCSO. For the first one is similarity. The similarities between pension scheme, EPF and SOCSO are helping them to save money for future use. Other than that, the contribute can get benefit from the interest payment that they made. Last but not least, they can withdraw the fund upon the retirement. Next, differences. We have a 5 aspect. First, meaning. Pension scheme. A pension is a scheme to which a sum of money is added during an employee's working year. For the EPF handle the ability saving scheme and retirement planning for private sector employees in Malaysia. SOCSO is a government agency founded to enforce and manage social security programs. For the second aspect is contribution. In pension scheme is Malaysian. For EPF, Malaysian is a moderator and non-Malaysian is voluntary. For the SOCSO, Malaysian mandatory salary is less than RM3,000. Optional salary is more than equal RM3,000. For the third aspect is ruling. Pension scheme is Pension Act 1980, EPF Employee Provident Fund Act 1991, and SOCSO Employment and Social Security Act 1989. In the fourth aspect is nature of amount received. In pension scheme, lump sum payment or monthly payment. In EPF, lump sum payment or 1 until 3rd payment or 1 until 4th payment, and SOCSO monthly when employees suffer for disability due to occupational accident. For the last aspect is amount withdrawal. For the pension scheme is based on the average of the last 12 months salary and year of services. And EPF 75% if employed for a month and 25% remain employed for more than 2 months. For SOCSO, 1.25% for each due and above underemployment injury scheme, and 1.75% for each below 80 under employment injury scheme and invalidity. That's all.
Hi, my name is Nur Eryna Nisha. I will explain about the benefit for pension scheme, EPF and so. First, for pension scheme, the benefit is lifetime financial supply guarantee after the retirement. The pension scheme group will receive a monthly pension at a certain rate and increase 2% annually. The second benefit is guarantee financial supply to the beneficiaries. The beneficiaries will receive the pension scheme if the original recipient dies while in service or after retirement. For EPF, the first benefit is dividend earning. Dividend earnings guarantee us that we will receive a 2.5%. The secondly is tax exemption. Our contribution are tax deductible up to a maximum RM 6,000. The third benefit is death benefit. The dependent of EPF scheme will receive the death benefit up to RM 2,500. And then the fourth benefits is incapacitation benefits. So for those who apply this benefit and unfit to work, they will receive a RM 5,000. For SOCSO, the benefit is divided into two schemes, which is Employment Injury Scheme and Invalidity Pension Scheme. For Employment Injury Scheme, the first benefit is for medical benefits. The second is temporary disablement benefit, and also third is permanent disablement benefit. The fourth benefit is funeral benefit. For the invalidity pension scheme, the benefits is the right of invalidity pension. Other than that, educational loan for the student who apply it, and also the return to work program that can assist the worker. The fourth is invalidity grant.
Assalamualaikum. My name is Athirah Syazana binti Mohamad Jafni and my matric number is 265033. Now I'm going to present about the advantages and disadvantages of pension scheme, employees provident funds and social security organization. The advantages for pension scheme, first is service pension. Monthly annuity payments are typically offered as a single life annuity for us only for the rest of our life. Second is gratuity. We can invest the money, keeping it working for us and possibly earning a better interest rate too. Third is disability pension. This is an additional advantage given to a government officer who is required to retire because of health reasons due to in the course of performing their official duty. The advantages of employees provident funds, first could receive higher return. The employees provident funds has return dividends averaging from 5% to 6%, but we could certainly earning more through unit trust investment if you are savvy investor. Second is medical coverage. The employees provident funds allows members who are having medical problems to make a withdrawal from their account to help cover the medical expenses. And the third one is house withdrawal. This scheme allows individuals to withdraw money from their employees provident funds account to reduce or redeem the housing loan balance with approved financial institutions. The advantages for a social security organization, first is survivor pension. It is mainly enjoyed by widows and children of the deceased. Second is rehabilitation facilities and dialysis. It can help to ease the burden of employees since the cost for rehabilitation is quite expensive. And the third one is constant attendance allowance. Constant attendance allowance is paid to an employee who is suffering from invalidity and is severely incapacitated as to constantly require the personal attendance of another person certified by medical board or the appellate medical board. For the disadvantages of pension scheme, first is working with the government for too long. Second is a risk of losing pension scheme privileges. A civil servant may lose pension scheme privileges if he or she resigns, is subject to disciplinary action, is dismissed before retirement. The third one is no relief tax. For those pension schemes who are eligible to pay taxes, they have to pay higher taxes. Next is disadvantages employees' provident funds. First is investment growth is not guaranteed. In fact, we can lose our money and therefore decrease our retirement fund. Second is profits may be subject to tax. Third is there is no guarantee for the beneficiaries in the event of death to the EPF scheme. Their beneficiaries is not receive any privileges. The last one is low disposal income. As part of the gross salary is deducted for employment provident fund contributions. This scheme has a lower net salary than the pension scheme. The last one is the disadvantages of social security organization. First is has strict conditions and terms to claim, and the second one is cannot reapply Social Security Organization for education. Applicants who have received Social Security Organization loans before but failed to complete the education program or cancel their loan before graduating are disqualified from reapplying unless they have fully paid any outstanding amount from their previous loan. So that's all from me. Thank you.